China has imposed an additional 55% tariff on beef imports that exceed quota levels, dealing a blow to Australian exporters. China has set its import quota at 2.7 million metric tonnes, which will apply for the next 3 years. The new annual quota level is below China's import levels for the first 11 months of last year for its main suppliers, Australia and Brazil. Australian exporters have criticised the measure but have differing views on how it will impact the local industry. Tim Ryan is CEO of the Australia Meat Industry Council and joins me now from Melbourne. Thanks so much for your time. Happy New Year to you.
Happy New Year, Ruby. Not quite the news on to hear on the first day of 2026.
No, I'm sure. I know that you've described these new measures as extremely disappointing, neither fair nor appropriate. Why is that your view?
So AMIC and others have been a party to the investigation that's lasted the last 12 months. Throughout that process, we've continued to make the case that Australian imports or Australian beef imports into China are not the cause of any damage to the domestic industry, and that's the basis for the investigation and the subsequent measures they've put in place. Nevertheless, with the announcement overnight, we're still caught up in these global measures that will impact and manage how China imports beef from all parts of the world. The challenge for us is the amount of quota allocated to Australia is significantly below what we've been trading into the market over the last 12 months. So going forward, we are expecting it to really hinder what we will be exporting into China and going forward to the degree of about a third of what we're currently doing.
And so what kind of impact will that have on the Australian industry?
Firstly, I suppose as of today, we'll continue to trade into China, but probably within the first 6 to 8 months, we'll utilise that allocation of quota. Then there will be a tariff that will kick in after that. That will effectively cease trade. I don't think anyone can afford a 55% tax on top of the price of beef. So when that happens, we'll then redirect exports to alternative markets. And now Australia is quite fortunate to have good access into many markets. But when you redirect trade, you're going to your second or third best preference. So we will see, I suppose, value eroded throughout that process. And to put into context, China is currently our second largest market. So it is a significant export destination for our beef.
I know for most of this year, we had hundreds of abattoirs in the US that were unable to export beef to China. Did that create a gap that Australia could fill? Did we send more beef there last year? I guess last year, not this year, in 2025?
Yeah, certainly that was the case. Australia is similar to the US, where we can produce, I suppose, diversity of beef, but particularly that more premium product, for instance, chilled grain-fed beef. And the US was heavily restricted in recent times. So Australia did fill some of that gap, but it also reflects the broader consumer demand for Australian beef. Australia's probably got the best long-lasting reputation and brand resonance with Chinese consumers. They love the product. They see it as a safe, high-quality choice when they're at the supermarket. So there's that fundamental demand coming from the consumer in China that's driven a lot of our exports over the last few years.
And so China says they are doing this to safeguard their own domestic supply, but it's your view that that Australian imports won't impact China's domestic supply so much?
Well, we've made the case to China's Ministry of Commerce that any injury that the domestic industry has received in the last few years hasn't necessarily come from Australia. There's other suppliers into the market, and the South Americans account for about 80% of beef imports into China. And they're the countries that we have seen a relatively large increase in exports into the market over the last few years. Australia has been there for over a decade now and has been a relatively stable supplier into the market. So there hasn't necessarily been a surge from Australia. And also the beef that we do send there is relatively premium price. So there's not the ability for us to undercut their domestic producers necessarily.
Do you think this step risks doing some damage to the long-term trading relationship that Australia and China have?
Yeah, it certainly, I suppose, is at odds with the free trade agreement that was signed years ago, and that's really underpinned commercial relationships that Australian beef exporters have established in the market. We'll certainly continue to do business with China, but once we hit our quota, say middle of the year at some point, the ability to trade in China will effectively stop. So it'll put pause to those commercial relationships until the new year starts in 2027. So it will really, I suppose, hinder what we can do, but it certainly won't stop Australian exporters doing business while they can in the market.
It has been a good year for Australian beef exports. There's still good overseas demand elsewhere. Are you optimistic about 2026?
Well, I think there's certainly plenty to be optimistic about in terms of overall consumer demand. The world loves our beef products. Aussie consumers love our beef products as well. But it's certainly a more volatile world. Although we've got through 2025 relatively unscathed, we do rely on reliable rules-based trade when it comes to doing business. And certainly the world's a lot more risky than it once was in the past. So this, I suppose, additional measure that China's implemented overnight adds a bit of concern, and also if it is implemented in combination with other disruptions on the global market, it could have a far greater effect.